Dan is Global Head of Tech Research at Wedbush Securities. And I got to say, we didn't even plan this, but our Tesla chart, let's bring it back up, perfectly matches.
I mean, that's
your yellow, orangish jacket.
I think that's a bullish.
We literally had this was not planned. Look at that. I think that's a sign. Why do you love Tesla so much?
Look, I mean, to me, look, the main thing is, my view is on the autonomous and robotics side. I mean, I think this now, when it comes to, it's going to be one of the best AI plays over the next few years. That's why we think it's going to be a $3 trillion market cap. But if you look at the demand's turned around. I mean, this is a bounce back quarter that shows, yes, still more work to do, but this is now setting up for what I believe is going to be a historical 2026 because the AI revolution now comes Tesla.
Well, it better, because the lead of the show with Dan Veru,
yeah, that was great.
You're Dan Ives, by the way, he's Dan Veru, was that every small cap stock in America combined is still smaller than NVIDIA. Mm-hmm. The same is basically true with cars. Every major car company in the world combined, can leave a couple out, are the same size or smaller than Tesla. Does that worry you at all?
Look, I mean, I was just in Detroit, and I think, you're definitely seeing some turnaround in GM and maybe, even in Ford, but...
Yeah, on big SUVs.
But yeah, exactly. But
by the way, gas guzzlers.
But the reality is that Tesla is not an auto company. I mean, I don't view Tesla as a car company. I think Tesla is truly a disruptive technology AI play. When I think about, because the future is ultimately autonomous. I mean, when I think about autonomous and robo-taxis and what's going to ultimately happen in 30 to 35 cities in the next year, that is $1 trillion alone from a valuation perspective in terms of a physical AI play. So that's why I think it's an apples to oranges what Tesla's doing in the rest of the auto sector. They're trying to play catch up.
Connect the dots, okay? I get the autonomous. I'm on the turnpike. I know where you live. You know where I live. I'm on the turnpike all the time. It's like demolition derby at this point. Cars are just going off in the woods. Everybody's on their phone. Half the people are stoned. I have no idea what's going on. I wish everybody had an autonomous car. I'm just going to look in the camera and say that. But we're because then we'd all just kind of cruise along the same way. We're a long way from that, Dan. A long way. How do we get there?
Well, first off, when you look at Tesla, I mean, today, let's call it 15% have full self-drive in terms of FSD. We think that's going to go to 50% over the next few years. So from a margin perspective, from a software perspective, that's going to be a game changer alone as that happens over the next few years. But in terms of autonomous, I mean, it's our view, 80% of autonomous world is going to be Tesla in terms of globally. So when you look over the next few years, you're talking about, let's say, 2 million vehicles, 3. We're talking about, like, eventually you'll begin to 4, 5, 6, 7 million vehicles. I could argue when that doesn't even include robotics in terms of Optimus, that that together could be more than the value of the company today. So that's our view. What's happening in this Tesla story is that the AI revolution, especially now with Musk back to being a wartime CEO, I mean, I think front and center. That's why we think $600 is probably conservative.
I don't know about the price. I'm the car guy, and I can tell you that what Tesla has done, and I've owned EVs, I've driven a lot of them. What they realized is weight is the enemy. Keep the car light, and you can get more range, because if you do what is it, Ricardo Montalban said, the fine Corinthian leather. The way that we've been sold luxury now, cars are heavy, weight is the enemy of range. I think that's why Tesla is winning against many other companies. Does this also go to your very bullish view and possible M&A target of Lyft?
Mm-hmm. I mean, we put out our M&A target. I mean, I believe Lyft in the next 6 to 9 months is ultimately acquired as a top acquisition candidate, because it's the view of autonomous. It's the view, whether it's a strategic, whether it's a financial buyer. Lyft is one. If you combine that with an autonomous play, I think that's the future. I mean, that speaks to really this convergence that we're seeing in tech, autos, and you could say energy and some other sectors.
Where do they fit, though? You got Uber. Uber just seems to get all the attention.
Sure.
It also seems to get all the rides. I know it's not, being tongue-in-cheek. Rode in a Waymo, by the way, out in Los Angeles a couple times. That was pretty cool. It was a little weird at first, but then when you get used to it, you're like, oh, there's no driver. I don't know if that's it was good or bad. Remember, somebody is probably always listening regardless. Where does Lyft fit in?
I think, look, the issue with Lyft is that obviously when it came to food delivery, mobility, and also being only a domestic player, but you look at what they have from a rideshare perspective in terms of that in terms of that network. If you combine that with ultimately autonomous technology, that I think is how maybe on the strategic side, PE is going to look at names like Lyft. And look, we just think this is going to be a tidal wave of M&A that happens in tech. Because with the AI revolution, still we think bottom of the second inning, you are going to continue to see this bull market play out. And that means strategic and financial buyers are going to be aggressive.